I'm impressed, guys. What do you guys think? What would you guys want to see the strategy do? And are you guys concerned at all about a market downturn? I feel like after the past week happened, I was like, the stock market fell for, to me, what seems like for absolutely no reason, right? Like it made no sense to me why the market all of a sudden crashed. I think it's just we've just gotten so leveraged. I just think there's so much leverage in the system. We're at very high PE ratios. A lot of people these days are trading on margin and on using debt to trade. And I just think the leverage in the system is just making everything super shaky. That's why I'm looking at building out some sort of put option trading bot, because I think that it would actually be able to do some pretty cool stuff with that. All right, I think a put option trading bot, it's definitely will make me sleep better at night, you know. Okay, so there we go. So here's the brand new AI that we just launched. So let's say I go to the website and say build with AI, right? I could ask it, so I could do things like I could ask it questions now, and I could actually talk to this thing and do research. What kind of strategies can we do? So let me ask the AI, right? What kinds of strategies would be good if the market melts down like it did the last few weeks? Put options, or what can we do? All right, so I'm going to type that in, and the AI is going to go off. We're actually using Gemini 3 behind the hood, guys. This is flipping awesome. Gemini 3 is super powerful, super smart. Literally the smartest AI on earth right now. That's what we're using, and we gave it a bunch of tools to be able to do a bunch of stuff. So here's what we got. It says, in a market meltdown, the goal is to profit from falling prices or move to safety. While buying put options is a classic manual strategy, automating options can be complex due to liquidity and expiration management. Here are 3 robust alternatives we could do right now: inverse ETFs, long, short, trend following. We can definitely automate anything. What is the best strategy for making money in a downturn? Okay, so here's what it's saying. Put options are theoretically the most powerful tool for a crash because of convexity. Here's why they're often considered the best for downturns compared to other methods, along with the specific challenges of automating them. Asymmetric risk reward: when you short a stock, your max profit is 100%, but your risk is infinite. With puts, your risk is capped at the premium you paid, but your profit potential can be 500%, 1,000%, or more. There's explosive gains on gamma as the market drops, right? The catch for automation: while puts are mathematically the best crash protection, automating them is significantly harder than trading stocks. All right, let's see. Here's a blueprint for a dynamic put sniper designed specifically to capitalize on multi-week meltdowns. Awesome. The setup: entry trigger: we don't want to buy puts when the market is choppy. Time decay will kill us. We only want to buy when a verified downtrend begins. Interesting. So indicator: 20-day exponential moving average versus 50-day SMA. Signal: when the price closes below the 50-day SMA and the RSI is below 50, confirming bearish momentum. Filter: ideally check that VIX is rising, ensuring premiums are expanding. Interesting. Okay. The contract selection: Greeks: understand SPY or QQQ. Expiration: 30 to 45 days. Why shorter options decay too fast. 30 to 45 days gives you the meat of the move without fighting rapid time decay. This is very interesting. Strike price is saying we want to have a delta of negative 30 or negative 40 out of the money. Why? These are cheaper than at the money puts. If the market crashes, the delta expands towards -1. Okay. In a meltdown, you put your put option will go deep in the money very quickly. The rule, if the option delta hits -70, sell to close and roll down. Buy a new put option that is again out of the money. Okay, stop loss. If the underlying stock closes back above the 20-day EMA, the trend is over. Okay. Okay, please build this strategy. Okay, so we're gonna have this thing actually build the strategy out. And let's see what this thing creates for us. This is actually very interesting. This is so it's saying we're gonna be basically looking for a downtrend first. So we want to be looking for a downtrend. And then if the price is below the 50-day EMA and the RSI is below 50, then we do this. And ideally, we also are looking at the VIX. That's pretty interesting. So I think because it built a strategy, it's saying it's looking at strategy code, but we don't actually have any strategy code yet. Let's see what this thing builds for us. So right now it's seeming like it's inspecting code, but we don't have any code yet. So I'm trying to understand what it's doing. We're going to give it a few seconds here. I basically asked it. So for those of you just tuning in, we built a put option trading bot because we're looking to do something like if the stock market falls, we want to be able to profit off of that. So we built a bot to do that. And I actually just asked the bot, I said, you know what, back test it over the time period when the market fell this year and actually figure that out. It figured out, you know, this is the time that it fell. It's doing it from February till May, and we're running this back test. I know Michael Burry, what he's been doing is he's been actually shorting a lot of these high-flying names, right? So he's been shorting, Palantir and a few other ones like that. Oh, look at that. We're actually seeing some results here. This is great. So it made $5,000. So this thing started off at $100,000. So it is profitable. Okay, so here's where we're at. So it says the strategy uses a fixed fractional risk model to determine position size. Here's the exact logic from the code. The bot calculates the number of contracts to buy based on risking 2% of your total account. That's not nearly enough. Oh, look at that. It actually made more money again. What the hell? When would that have been? It actually made another trade and made more money. I thought that it would have only made money in March, but this is actually pretty good. I'm actually pretty impressed so far. Look at this. It like barely ever loses any money. It's just basically going up. I mean, this is actually pretty impressive. Look at how much money. This is a 2% of the account position. It made $10,000 in like a month with only 2% of the account. That's actually really impressive. Right? But imagine what if it owned more, right? What if it owned 10%, right? Like this is something I'm thinking of, you know, I could actually run on maybe my Schwab account, right? And then just whenever something pops up, I'll just take a bunch of cash and just buy this, right? I think that'd be really cool, right? Or what we could do is we could have a bot that normally owns like a TQQQ or something like that and flips over to put options when we start seeing a market downturn. That would actually be pretty damn interesting too. As it says, currently crunching numbers, increased position size is a major jump. In the options world, this move goes from conservative to aggressive speculation. Makes sense. The risk going to zero, you're absolutely right that worried about options going to zero. If you allocate 10% of your account to a single put option and it expires worthless, you lose 10% instantly. A string of 3 to 4 bad trades could draw your account down by 30 to 40%. Yeah, that makes sense. These are fantastic. So basically it's saying put a stop loss of 50% and we have a take profit rule of 200%. I didn't even realize that. Sell if DTE is less than 10. I actually really like these ideas. Check this out. Here's our back test. It's still going. This is pretty damn cool. Look at this. 2% of the account is up $10,000. Look at this. This thing made a 40% annual return on this time period. This is when the market dropped, guys. This is something that makes money when the market actually falls. All right, so we see this return here. Okay, let's take a look at the tear sheet. Look at that. Boom. Stock market goes down. Ours goes up. Almost exactly the opposite of what the stock market did. Right? So you see here, this is the S&P 500. It dropped over this time period, right, in yellow. And then our strategy made a bunch of money during that same time period. Right? So it almost looks like a mirror image. That's kind of crazy. And look at that. Even when the market came back up again, we didn't lose that much money in this thing because it didn't actually enter back in. So that's actually very interesting. I think it's a very cool strategy. Well, I hope you guys enjoyed that little demo of how our new AI works. This thing is flipping awesome. If you guys want to check it out, go to botspot.trade. You'll be able to use this new AI. As you can see here, this is really damn cool.